In today's weekly Forex forecast for the week ending May 16th, we're talking about the DXY, the euro, the pound, the dollar versus the Swiss franc, and also the Australian dollar. So I would love to sit here and tell you guys that market conditions are great. Unfortunately, they have been sideways for a few weeks, and you can see that here with the DXY, mostly sideways, starting to break out a little bit. We talked about last week this potential reclaim of the bottom of this channel, and we did get it here on this candle. So if you look at this candle right here, this green candle, you can see where before this, the bottom of this channel was serving as resistance. This is what we talked about in the last video. You can see these lows back here, right off of the bottom of this channel. We had the breakdown below it. We had the reclaim. And so far, we've gotten a little bit of an uptrend from the DXY, although, again, it's still very choppy out there in the Forex market. Now, for the DXY, what is going to be key going into next week is, first of all, you can see here that this area around 100.2 is going to be a must-hold support level for bulls, because if we see the market start to close below this again, then this up here is a failed breakout, and we're probably going to get a move down here toward the lows, probably sweep these lows down here in this area, right? So 100.2 is going to be critical going into next week, and that's on a daily and weekly closing basis. So as long as the market is above this, you do have a slight uptrend that we do have to respect, and we also have the potential for a move up there toward 101.8. And the reason I've had this on my radar for a while, and again, I talked about this in the last weekly forecast, is that, back here on this candle, right, this big red candle that you see here, this area around 101.8, we never saw any kind of retrace into this area. And a lot of times when you do get a market doing this, we saw it back here, and we got a slight retrace into this, and this is rare that you get candles like this and no retrace at all up here in this area. This is indicative of a very weak trend, or a very strong downtrend, I should say. But this back here, this has been on my radar right around 101.8 to potentially come up here and fill in this area before the next leg lower. But again, this area around 100.2 is going to be critical. Today, we need to see the DXY hold above that to get any kind of move up here into 101.8 next week. Now, one thing here that I also want to point out before we move on to the euro is going to be trend lines like this up here. So if I snap a trend line up here toward this high, this area through here, okay, this is also going to be key support. Now, one quick note about trend lines when you're drawing these, and I do see a lot of traders go wrong in this area, is looking through here. This trend line placement that I have right here is technically valid. And you can see here on this red candle that a lot of traders will see this and they'll say, well, this isn't valid because you're cutting off this candle body. But the key here to remember is that this daily candle actually closed below this trend line, and that's all I care about. I don't care that a market opened up here. As long as it closed below the trend line, then this is technically valid. And you can see the candle before it right there at the close and open for this case, in this case. And we've also got highs along, this level up here as well, and also these highs through here. So really the placement of this trend line is valid. And you can see where this actually comes in just below 100.2. So we could technically see the DXY, like it did today, dip just below 100.2, even next week down here into this area, and then we get a bounce. So keep that in mind, that if you're trying to look for shorts on the US dollar with the market moving just below 100.2, you've got to be careful, because we do have that trend line that comes into play down here next week, somewhere around 99.8, maybe 99.9. All right. So keep this in mind, that this entire area down here for the DXY is going to be key support next week. Okay, so moving on to the EURUSD, we talked about this earlier this week, but you do have a trend line off of these lows from back here in February. Okay, so very similar to the DXY, that trend line we just looked at that was descending on the DXY. This one obviously is ascending, and you can see where off of these lows back here, I could technically draw this a little bit higher, but either way, this area up around 1.13, just below that mark, is going to be resistance for the EURUSD. Now, let's take a look here at the weekly, because I talked about this yesterday, and really for the way that I trade, guys, I just want to put that out there, that this is what I tend to look for. So you can see back here, and you can use this on any time frame. Honestly, the higher time frames tend to work a little bit better. So like the daily time frame or even the weekly. You could get away with it on the 4 hour as well. I would be careful though on the 1 hour, because you do get a lot of false signals. But basically, the way that I look to trade is, you can see back here, right? This is our range, and this is my strategy in a nutshell, essentially, is you've got these lows back here. You saw the sweep of these lows, and then on this reclaim, okay, this is where you start to look to buy, right? And again, this is a weekly time frame, so this was all one candle, but of course on the daily and even the intraday charts, you had multiple breaks above this area, before we got this weekly candle. So basically you've got the sweep below this area, and then you've got the range highs up here, and now we've had the sweep above. So markets tend to do this because you get liquidity that builds up below these lows down here and above these highs, and big institutions need that liquidity to fill their positions, okay? Because if you have massive orders out there, you can't just go out and market buy anywhere. You've got to tag that liquidity, and institutions know that the majority of liquidity forms above highs like this and below lows like this within ranges. So I wanted to kind of put that out there just to kind of give some clarity on how I like to trade these markets. Now, looking at the daily time frame, okay, you can see where the market did close, the euro did close below this 1.1275 level yesterday. So on Thursday, we got to close below this, as well as a close below this trend line. So this right here is going to be a confluence of resistance now right around 1.13 going into next week. However, the reason that I'm not a fan of the EURUSD right now between these two areas is because you don't want to go out there and, you could, but I think trying to short into 1.12 is ill-advised, because if we zoom out here, you can see how significant this area is, right? We've got these two highs back here from the euro. And so 1.12 is going to be a critical support area. So if you're shorting into this area, you're essentially shorting into these highs back here, which is obviously ill-advised. And then at the same time, if you're looking to buy down here, you're buying into 1.13, which we saw the EURUSD break below on Thursday. So you kind of have this area through here, right, between 1.13 and 1.12 that is just kind of an area of like no man's land, so to speak, because really I think that in this area, buying is ill-advised, and also trying to short the market is also a bad idea. Now, with all of that said, okay, my ideal situation here, and it doesn't mean that it will happen, I have to respect what's on the chart. My ideal situation here for the euro is to get a sustained break below 1.12. Now, it doesn't have to happen today. It doesn't have to happen this week. Ideally, yes, it would have been nice to get that. But if we were to get something next week where the euro starts to break back below these highs back here, okay, breaking back below 1.12, then you have this situation where you have this confirmed failed breakout, okay, very similar to this rounded bottom that we got back here. Remember, this right here, this area through here, was the location of those range lows that lasted for over a year, right? And so you get this reclaim up here, and you can see the rally that followed. So my ideal situation, just based on my strategy, would be to get a sustained break back below 1.12 to look for shorts down here in this area, and fill in these imbalances back here, right? Now, will we get it? That's yet to be seen, obviously, right? We don't know if the euro is going to do that or not. But again, I think that would be the ideal setup from here, just because we also have some major imbalances here on the EURUSD. Specifically, like you look at this candle right here, this green candle. Yes, we've gotten a little bit of a retrace so far, but there is still a lot of real estate down here that is an imbalance based on the velocity of that move up. Okay, so there is cause for concern here if you're a bull, dropping below 1.13, but with 1.12 intact, again, there really is no short here just yet. But ideally for me, I would love to see the market take out this area down here next week, closing below here, and then look for shorts up in this area. All right, so next let's take a look here at the pound, which is very sideways. In a lot of ways, it's almost more sideways than the euro, so not really ideal conditions here. Now, we do have resistance up here around 134.34 that we talked about recently, so clear enough, you've got this high back here, and you also have this recent high, which did sweep that high just barely. So we do have the potential for a pullback here from the pound, but the question is, can the DXY take out those levels we talked about? And as for the pound, can it get below highs like this back here around 132? Okay, so you've got this high back here. You can see so far today, we did get a bounce there. And what was interesting about this move here today too, is that you can see these lows back here within this range. And we never got a full retest of this high, right, until today. So again, this goes back to what I said about markets sweeping highs and lows, right? Because you can see that back here, if you look at it like this, you essentially have these lows through here, and this is the 4-hour time frame. You've got these lows back here. You had the market sweep those lows, and the reason for that is because, again, liquidity builds up down here in this area. Now, the question is, though, is this right here enough to get the market back here toward these highs? And personally, when I look at the EURUSD and the DXY, I'm not really convinced. Okay, I'm not convinced that that's going to be the case. Furthermore, I also don't like trading fake outs on the intraday charts, especially in conditions like these that we've seen over the past few weeks. So with all that said, looking at the pound, we've got support down here, 132, resistance up at 134.34. And, look, could we see the market move higher? Absolutely. At the same time, though, you do have the EURUSD starting to show a little bit of weakness, although, again, there's really no reason to get overly bearish on these markets. But you've also got, for the pound, you've got these areas back here below levels like this, down here in this area where you've got these imbalances, right? These candles, like, notice this one back here, absolutely no retrace into this. And so I'm not saying that we will come back here and revisit these, but there is a reason to do so. There is a magnet, so to speak, that if we were to get the pound breaking down below areas like this, right, below these lows and a sustained break below here, this could be a little routed top. We could get that push down here into some of these imbalances. Now, of course, at the same time, you've got to pay attention to the DXY and those areas we talked about, because that is going to come into play when you're trading the major currency pairs. But all in all, guys, just a very choppy currency pair right now. I mean, really not a whole lot to do here, in my opinion. All right, so next up, the dollar versus the Swiss franc. And honestly, even though this market is also very sideways, this is the one currency pair, or one of the currency pairs, that I'm really watching right now, because this right here is setting up for a potential fake out or confirmed fake out below some very major swing lows. So looking here, let's go all the way out here. In fact, let's go back here to the weekly, or even, it might be better on the monthly, just to kind of show it a little bit better. But you can see that basically, for the most part, even though we have seen this pair trend lower over this time, essentially when you look at this here, this has been a range, right? This has been a range going all the way back to 2015, okay? And this low back here, you can see these lows through here, no coincidence there, and we're seeing the pair trade below that. Now, again, this goes back to the way that I trade. It's not saying that this is the likely scenario right now, but based on the way that I trade, I would love to see this become a failed breakdown and get the reclaim back above those lows on the high time frames and get that push back here into the range, right? Because that, in my opinion, is when you're talking about risk reward, there's really nothing better than that. And I've also found that with ranges like this, when you try to short a range, a break like this, a lot of times it will backfire on you. And I'm not saying that's going to happen here because, obviously we don't know. These markets are very sideways right now. But a lot of times, years ago, I would have tried to sell stuff like this through here. And in a lot of cases, in most cases, I would get burned on that. And that's why years and years ago, I moved to a different strategy where I'm actually looking to play the fake out below areas like this, knowing that this is liquidity down here that those institutions are grabbing and potentially filling right now, and then look to play the reclaim above this, because I know when you get a reclaim like that, you do get an extended move in the opposite direction. Now, again, I want to be very clear about this. I'm not saying that this is going to happen right now. I don't know what's going to happen here. Nobody does. But this right here would be a very high probability setup if we get it, okay? So again, going back here to the weekly, if we get a move back above these lows, and this is what's going to be key. I mean, even looking at the weekly here, this was the range for the US dollar versus the franc. And you can even make a case that we've got this low back here that's currently serving as resistance right now, but you've also got these lows through here. So really, to make this a confirmed fake out below here and get that push higher, really you would need a close above 84, right? 0.84 is what you would need to see that sustained break back above on the high time frames to really give the confidence that this down here is a fake out and push higher into levels like 87, okay, which is essentially the mid-range of this range, right? You've got this range back here, and this through here is your mid-range. So that's what I'm looking for right now in this currency pair. Again, it is a very interesting setup if we get it. Right now, though, it's just unclear as to whether or not we are going to get that reclaim if bulls have it in them to reclaim this area back here, or if this is just going to be resistance and then we just get that push lower back down here toward the lows. All right, so we'll wait and see what happens here. For now, though, I mean, even if you're looking to short this, even if you're just looking at this as resistance, again, I just don't really see a lot here because the market has been just so sideways. I mean, sure, you could play this little range right here, but that's just not for me. I'm not interested in, 100 pips. I'm looking for, on a pair like this, I'm looking for those 300, 400, 500 pip moves. And again, for me, that is going to come on a reclaim of this area if we get it. If not, then the downtrend continues and I'll go from there. All right, let's wrap up here with the Australian dollar, which is also a very interesting currency pair, despite the fact that it has been also sideways for the most part for the past few weeks. And the reason this one is so interesting is if you guys remember back here in February and March, we were talking about this buy side fake out that we got above this trend line. So I'll just recap this quickly, but you can see that back here we had this trend line off of the highs. And you can see that even right here before this, we had these highs through here. We got the close above, close back below, retest as resistance, sell off. Now, I traded this one, and I also talked about it in our VIP group. So specifically, this through here, and again, this is how I like to trade, right? You get that buy side fake out, you get the close above, close back below, retest as resistance, sell off. And I was shorting this through here and took profit, along the way down here in this area. And my final target was actually down here, this little pocket right here, which played out nicely. So anyway, guys, this right here was the top of a broadening wedge that I talked about back then. And the reason this is so interesting is because back here at the time, to be honest with you, I didn't think that we were going to come down here and test the bottom of this wedge. Only because if you look back here, yes, it was technically valid because we had these three lows. And clearly we had the highs up here, right? But at the same time, when you look at this wedge pattern, right, the bottom of this wedge from up here was nearly 500 pips lower. And so you look back here, and I wish I had seen this at the time, although there was a lot of volatility back here making it difficult to trade. But you can see that right here, I mean, this was a perfect retest of the bottom of that wedge. So this played out really nicely. Hopefully some of you guys who saw that analysis and you saw this pattern, put this level on your chart and you were able to, either, buy down here or take profit down here, whatever it might be. But anyway, guys, this has been a really nice broadening wedge pattern here for the Australian dollar. And you can see that the retest down here at support led to another retest up here at resistance. Okay, so again, you can see that this is the same level here, and we got a retest over a few days here recently. So we did get that retest of the top of this wedge, and so far, we have seen the Australian dollar actually lose a key area. Now, this also lines up with the euro breaking 1.13. Okay, there's no coincidence there. Where we're seeing the Australian dollar start to kind of break down a little bit, form a little bit of a fake out up here in this area, with this area around 64.40 coming in as resistance. So if this can hold up, okay, and this is still a big if because again, markets are very sideways, the DXY is sideways. If this holds up, then there is that chance that this up here becomes our fake out and we get that push down here into some of these lows, potentially sweep this around 63.40, and then from there potentially get a move down here into some of these imbalances because like a lot of these currency pairs, especially the Australian dollar, though, because of the velocity of this move, you can see that all of this back here, all of these are imbalances, right? Because we saw very shallow retraces into them. This one, not so much, but you've got areas like this back here that would be really interesting if we do get a, push lower down here at the lows and a sustained break below that. For now, obviously, a very strong uptrend here over the past few weeks, or at least going back to mid-April. So you've got to respect that. But at the same time, again, we also have the market closing below these highs from back here, right? So failing to hold above it through here on this candle, we got the close below, retest as new resistance. So now you're kind of locked in this new range, okay? And also don't forget that the market's coming off of the top of that broadening wedge, all right? So a lot to consider here, even though the market is very sideways, but hopefully we are on the verge of some resolution here in the Forex market. Because again, things have been very sideways. So I hope this video has helped, guys. Be sure to claim your PDF, your free PDF in the description of this video to learn how I trade stuff like this over here, this buy side fake out, and many more out there in the Forex market. It is completely free. It's 8 pages. It's going to show you exactly step-by-step how I trade these patterns. Trade well out there, guys, and enjoy your weekend. I will talk to you again next week.